And I put it on my, let's see.
That's cool. I can just repost it or something.
You know what? I'll throw it on mine as well. There we go.
How do I find this? I just look up Jeff Walton.
Yeah, you should be able to look me up and it'll be on there.
Oh, that's live with Restream. Okay. Yeah, we're good. All right, let's rip it.
Are we ready to rip it? Cool.
Yeah, we're ready.
Okay. Let's jump in here. We are going to talk about Strike and Strife. We had a pretty fantastic week the last couple of days in Orlando at Strategy World. What an electric event. It was totally incredible.
It was
there
amazing.
was I mean, there was so much energy all over the place, wasn't it? I mean, it was like
people were psyched to be there. I mean, and think about the difference between the people that are there for the BI conference and the Bitcoiners just like glowing, you know? Like,
right. Yeah. The Bitcoiners were just fired up. Like all of the Bitcoiners there were just like really, really bringing the energy. And when you walked into the place, you're like, wow, this is $100 billion company, right? Like this is the marketing that they had everywhere that was like plastered all over the walls. They had a sick merch station. The keynote area was sick. It was very, very well done. There's very clearly put a ton of time and energy into it. It's totally wild. Okay, now we got some people here. Maybe we jump into this because this has been top of mind. We had a lot of conversations about Strike and Strife over the last couple days and walking through how this can potentially work. And I know a lot of people are asking questions about this right now, and we wanted to walk through it and give some examples of how we're thinking about it, some conversations that we've had over the last week, and where we think this can potentially go. Cool. So let's just jump right into it. So MicroStrategy, perpetual preferred shares, Strike. This is a preferred share class. So this is an equity instrument that's tradable, fully liquid and tradable like any other equity instrument. And it is higher up on the capital stack. So if you think about, and what I mean by higher up on the capital stack is, if there were a liquidation type event, the position within the capital stack are the people that get paid out first. Basically, the common stock shareholders take on the most risk. Preferred shareholders take on less risk. Like as you go higher up the capital stack, you take on less risk. So effectively, what that means is the collateralization, the over collateralization of the balance sheet protects the preferred shareholders. So this is a fascinating instrument. We found out this last week that the creation of Strike was the result of significant iteration on ChatGPT, thinking about a new instrument to hit the market that provides a potential yield and protects. It provides yield, gives Bitcoin exposure, but reduces the volatility. So there was significant iterations on this, back and forth to design this product. So basically they had a really complex product. They went out to the market. The market said, this is tough to model. I don't really know how to price this thing. And then it went back to ChatGPT, reiterated on it, and then went back out to market and priced it with a much more simple product. And that's what we see today with Strike. So this is effectively a kind of like a convertible bond, but put into a equity like instrument. So
liquid. Yeah. You know how Saylor always used to say, it's like, well, I can build, it takes 5 years to deploy capital in a building in Manhattan, but I can do a convertible bond and deploy the capital immediately into Bitcoin. This is just creating that little bit more efficiency by making it fully liquid and able to be issued through an ATM. So it's like he just doesn't stop. I mean, he's optimizing.
Yep, exactly. So Dan and I were chatting a little bit before this, and we want to talk about this broken down into its two components. So Dan, you want to walk through this outline here over on the left-hand side?
Yeah, when we're talking Strike, just from the perspective of like, okay, can you just strip out the convertible part and make it such that it's like, okay, you've got a cash portion that has a yield, a bond-like yield, and then you also have MSTR equity exposure because it converts into MSTR above $1,000 a share MSTR. So the way we did it was, okay, Strike's trading at $92, and then a Strike share converts 10 strike shares convert into 1 MSTR share. So using that conversion ratio, you could say, well, if I have 10 strike shares, I can convert it right now into 1 MSTR share. You couldn't right now, but in theory you could. So if you were to go convert your strike into MSTR, from your $922 of 10 strike shares, you could extract out $412 of MSTR. So that breaks down to be about 45% of the value. The current trading value of STRK is represented by the intrinsic value, the MSTR denominated value, based on just the ability to convert. And that leaves $510 as extrinsic value, just random value, not random, but value assigned to STRK based on the coupon payment and the credit worthiness of the company. And when you look at that kind of ratio, you can see that about 45% again is value associated with MSTR. The other 55% is that perpetual dividend value. Does that make sense, Jeff? What do you think?
Yeah, I think that makes sense. And maybe it makes sense to scroll over to the right here and outline how exactly this works a little bit more. So if you hold one share of Strike, so one share of Strike is $92.38. The dollar yield per share is $8. So your effective yield as of today, trading at $92.38, is 8.7%. The 10-year US Treasury is 4.36%. So the spread that you're getting over and above the technical risk-free rate is 430 basis points. And so, I mean, if you look at some of the other things in the market, right? This is you're effectively swapping your dollars for basic for Bitcoin like upside, right? Because this is convertible into MSTR shares over $1,000. You're swapping your dollars for Bitcoin upside and reduced downside and yield in perpetuity,
Which is nuts.
which is crazy, right? Like it is like what an awesome product, right?
Or like for someone, yeah, Jeff, like what if you're someone who like wants to sit half in MSTR and half in cash? Instead of doing exactly that, you can just fully port Strike. That would be the answer to your problem here, right? Because if you want half MSTR exposure and you want half cash-like exposure, whether that be in US Treasuries or something of the sort, then instead of doing that yourself, you can use Strike and create that exposure with a much higher coupon payment on your cash position. So I think that's kind of who this is targeted towards.
Yeah, and I mean, think about like portfolio construction of retirement accounts. I mean, chatted with my father-in-law a little bit about this, and he wants some of this upside exposure. He's basically at retirement, and I think there's some hesitation to like actually use this portfolio that he's built over time, right? He's built this portfolio for the last 30 or 40 years, and there's some hesitation to actually use it. And now you have some instrument where you can park some capital here, get an 8.7% yield, probably going out. It's outperforming every other yielding instrument in the market right now, right? If you want to go get a preferred stock ETF, you're probably going to get, I don't know, 600 basis points or 575 basis points, something like that, depending on the credit quality of it. And now you have an alternative product on that gives you Bitcoin upside and yield in perpetuity over time. So you can maintain the value of your principal, and your principal can also rise with MSTR rising, but also get paid 8% on your original principal in perpetuity. It's just an incredible vehicle.
It really is. Hey, can we just do an experiment here? I like thinking about Strike. I think one way to think about it is the way you're talking about it. I think that's like the best way to think about it is Bitcoin upside with that perpetual dividend. Another way for like more MSTR oriented folks is to just think, okay, well, if you have 45% of the value of STRK is just simply exposure to Class A shares, whereas 55% of the value of STRK is extrinsic or principal that is garnering yield, is that receiving yield. You could argue, you can make the argument you're getting that $8 per $100 of STRK as simply a return on that 55% extrinsic, right? If you were to buy MSTR through any other vehicle, MSTR is MSTR. You don't receive a yield on it. Here you have this 55%, which is what's left over after you get MSTR exposure. you're actually getting the yield on that value. Like the $8 yield right now is the yield on the $51 per STRK share. And when you do that math, it should come out to like 16% or something. I love thinking about it like that.
Yeah, I got it right here. So divided by that. Yeah, about 16%.
Which is just absolutely just nuts.
That's bonkers, right? Yeah, I think. Oh, that's a really. I like thinking about it like that. You're basically you're getting a 16% yield on your principal, and the $412 is like the MSTR exposure that could continue to grow into perpetuity. The other way you could say it is you are getting a 8.7% yield with a free call option.
Exactly. Yeah, that's a good way to think about it.
Right.
Too.
It's like the inverse. If you don't break it down into its components, it's like, okay, well, you get paid an 8.7% yield in perpetuity for a free call option on MSTR, and like your principal today can continue to grow, right?
Yeah, that's, and I think for different people it's different. Like some people want the free upside, some people want the higher dividend yield with the built-in upside. I guess whatever makes people more comfortable holding the product. Either way, it's just a fantastic product.
Should we talk about risk of the product,
Yes,
and then maybe shift into Strife, because I think
absolutely.
Okay, let's talk about risk.
Are we going to pull up the presentation? Cool.
Yeah, let's talk about risk. Maybe we start here.
Yeah. Oh, this is perfect.
Right. Wait, hold on. Let me compare it to this one. Yeah. Okay. Yeah, let's do this one. Here we go. So slide 69. This is assuming a $94,000 Bitcoin price. Obviously, you're about $8,000 or $9,000 above that now, but a 50% BTC volatility and a 30% Bitcoin annual rate of return, compound annual growth rate. So if you focus down here, maybe I'll scroll down a little bit so get it out there. Okay, so if you look at this line, so Strike right here, so of the preferred stock, I guess it's really furthest down on the capital stack. All of the convertible debt, this is put in order, right? So you can see all the convertible debt, and then the preferred stock. Strife is more senior to Strike, and Strike is the least senior, and MSTR is the sits below all of this. So the way that Strategy has structured their the credit quality or the downside risk we're thinking about this is thinking about the over collateralization of the balance sheet relative to the liability that they hold on the balance sheet of this this particular instrument. So when this was put together, and I know this number is higher now, effectively MSTR had 5.3 times the amount of assets than they did the liabilities held on the balance sheet. So you think about what potential situation would result in the assets held on the balance sheet to be worth less than the debt obligations that they have on the balance sheet. And basically, the price of Bitcoin would need to fall down to something like $14,000 and stay there for an extended period of time in order for the preferred stock to effectively be rendered worth just the liquidation preference. And we think about the probabilistic scenario that happens is incredibly low, right? We're thinking a very low, very, very low probability. So the way that Strategy has it outlined here is you've got a BTC credit. So the probability of that happening is 13 basis points, which is basically black swan, right? You're talking effectively like a 1 in 1,000 year event in order for that scenario to potentially happen. And the market's effectively giving you 700 basis points. So the risk adjusted yield that you're getting on that product is 687 basis points. And you have the effectively free call option that can go on into perpetuity. So the downside of the product itself is the fact that the downside of the product itself is MSTR being able to manage their balance sheet and their collateralization of their balance sheet to make sure that it's not too overweighted or too over leveraged such that they wouldn't be able to pay off the obligations into the future.
Yeah, and the beauty about looking and analyzing STRK is like when you look at MSTR, you're like, okay, what's the upside here? How are they going to acquire BTC per share? Is the multiple going to expand, contract, this, that, and next thing? What's the effective yield? Here, you don't even have to look at it like anything like that. All you have to look at is the credit worthiness of their Bitcoin stack. And to Jeff's point, it's like you make certain assumptions. You have the historic volatility of Bitcoin. You have your expected rate of return. And even if you don't believe there's any sort of positive expected return on Bitcoin, you can still make probabilistic determination that there is, in fact, huge cushion here because of the over collateralization of Strategy's Bitcoin stack.
So if I were where I think this product is like incredibly valuable for people that are coming to the market here, if you had the option, if you were nervous about buying Bitcoin, right? If you
Yeah.
were if you had any nerves about buying Bitcoin because you're like, oh my God, this thing's too volatile, I can't add it to my portfolio because I got to start pulling on my retirement. But you wanted to add Bitcoin exposure to your portfolio, you do it via Strike, right? Like
100%.
this is, and maybe we'll jump to this slide, right, where we got the products here.
Oh, this one's cool. Yeah.
Yeah, you can effectively participate on the upside of Bitcoin and MSTR, but be protected to the downside. You can have effectively like Bitcoin-like exposure to the upside, but have a max downside of 20% and get paid a yield to hold that instrument.
Yeah, and this slide's so weird because you can see Strike has below a 0% downside protection. It has negative 10% downside protection, and that's a result of Strike trading below its liquidation preference. So in the case that MSTR becomes insolvent, you get paid out right now $100 for every $92 of STRK you hold. So that goes to show you, that the market's not pricing this instrument correctly, and it just gives you that much more upside, room for upside in the future.
Yeah, significant upside potential. So if you this is a perfect product for anybody that wants to protect the downside volatility, get paid a yield over time into perpetuity, and still have upside.
Exactly.
So perfect. So it's like a beautifully created instrument.
And it's fully liquid, right? Like that.
Fully
That's a
liquid. Yeah.
benefit there.
And the benefit to MSTR is enormous, right? If the price of Strike starts to trade up, oh, there's so many moving pieces with this. If the price of Strike starts to trade up and the liquidity starts to increase, they can start to use the ATM on the Strike instrument more and more, right? As the instrument becomes more popular, they can start generating more income coming through the door, so they could buy more Bitcoin to over collateralize the balance sheet and continue to plow forward into the future.
Which is accretive, highly accretive to the Class A shareholders. So while the Class A shareholders issue their ATM to both acquire BTC yield and to increase the capital stack of Strategy, which then over collateralizes Strike, when they go out and issue Strike, they're leveraging up the balance sheet and increasing the potential earnings of Class A shareholders in the form of BTC yield into the future. BTC torque is a better word for it.
BTC torque. Yeah, continuing to add income potential and increase the flywheel effect of the MSTR common stock.
Exactly. Yeah. Maybe we go back to Strike and then come back to this.
Strife?
Sorry, Strife. Do they have Strife on? They don't have.
No.
Okay, it's not convertible. Got it. Yeah.
Yeah, it's not. It doesn't. There's no upside. There's no upside. Yeah.
That's the underrated. But maybe we talk briefly about the underappreciated potential for upside for these products because of the credit rating. Like, let's say Strategy trades sidewards or Bitcoin trades sidewards, but the market gets more comfortable with the fact that Bitcoin is collateral and the Strategy is managing their leverage ratio. If those credit spreads come back into kind of where they should be in the market, I mean, Strike's principal could appreciate significantly, or Strife's principal could appreciate significantly without the actual underlying MSTR increasing, just because those yields are normalizing. So like, maybe we do a quick calculation. Like if we go back, let's go back to that. Yeah, exactly. Like Jeff, you were saying what a typical preferred is yielding? Did you say it was like 600
Oh
basis points?
yeah, like 6%. Yeah.
6%. How much would Strife, what would be the principal value of Strife if Strife were yielding 6%? It would be,
Oh, it'd be like 115, maybe more than that, 120.
yeah, so that's your, right. If it were just
Yeah.
to match any other preferred, and the other preferreds don't have an embedded call option, that's your effective potential for just increased confidence in Bitcoin as collateral, not even appreciation in price. So, I mean, I
Right.
think that's pretty, or, and look at it even for Strife, right? If Strife were to trade down to a even 7% yield, um, even a 7% yield, I mean, Strife would be trading up to 130, 140, and Strife shouldn't have upside. The whole
Yeah,
point of
yeah.
Strife is it shouldn't have upside. Yeah.
It shouldn't have upside. The other crazy thing here, right, is so let's say liquidity increases on this product and people start buying it and they use the ATM and now more Strike shares are, trading in
Yeah.
the
Yeah.
market. That should theoretically bring the price down and the
The
yield
principal, right? The
and the
principal,
yield it should bring the principal down and it'll bring the yield up, which makes it more attractive again. So it's like this Strike is its own flywheel in and of itself. Right?
yeah.
It's like this self-healing product that if the yield rise if the price drops and the yield rises, more interest should come into the product, which should lead more Bitcoin added to the balance sheet, which should perpetuate the whole thing.
The ATM is so effective on these products. Like the ATM on these
Yeah.
products is the ace up their sleeve right now.
Yeah. Yeah.
People
The
aren't
ace up
appreciating
the sleeves is the way yeah, that's a great way to think of it.
because they can just ATM until they hit the leverage. As long as there's volume on these two products, they can ATM it until they hit their desired leverage ratio and then just stop.
Yeah.
Right? ATM on Class A is very dependent on volume. They're trying to tiptoe into the market, not mess with the share price, not depress the share price. With these, the yield makes it such that they can just smash the ATM, and those things will um, self move back to a appropriate yield based on the creditworthiness of the company.
Right. Because they're going to be adding more Bitcoin to the balance sheet, which is increasing the credit worthiness and the conversion premium, right? The reason that I think one of the reasons that the they haven't issued another convertible bond is because this is a way better product. This is a way better product for the market. It's a way more accretive product for MSTR shareholders, and I think that this capital pool is significantly larger, right? Like this is a fixed income product. The convertible bond market is kind of fixed in size and scale. I was chatting with some guys over the last couple of days. I think the crypto-related convertible bonds represented 27% of the convertible bond market in 24 and 20 in 2024, in like the last 15 months or something like that. And prior to that, between 2020 and 2023, crypto-related convertible bonds only represented 2% of the market. So it's a significant increase uh, in how that the percentage of convertible bonds in the crypto market it's increasing drastically.
Yeah, no, it's absolutely insane. And Staler has so much more control over issuing Strike as opposed to the convertible notes. Like he doesn't have to go through the entire private placement process. They don't have to deal with the pricing period, which has just been notoriously bad for the stock. They don't have to worry about issuing redemptions and conversions only when the convertible bondholders are excited about it. So, I mean, it just gives them a lot more autonomy. Like they're bringing the market, they're in-housing the convertible notes using Strike, which is a good way to
Right,
think of
right. And you don't have people that are just consistently shorting the stock, going the opposite direction, right? Just arbing out the volatility
it.
and
Exactly.
creating a bit more chaos.
I think it would be interesting if another preferred product they created was a preferred with no dividend. Because right now you can't convert ARB strike because the dividend stabilizes the price. So it's not acting like a 50 delta instrument. But if they issued a STRK offshoot with no dividend, then it should behave like a convertible note. And you could just buy the fully liquid STR whatever and convert ARB yourself. Like you could do it in your basement. So I mean, that'd be kind of cool.
Oh, oh yeah, that's interesting.
Yeah.
Basically, a 0% convertible bond is
Prefer-
as an yeah, a preferred stock as an equity instrument that's fully liquid and tradable, but amongst like all these other products. in the public market.
Yeah, I mean, that would be kind of cool, I
Oh
think.
yeah, that would be pretty cool. Yeah, because we can't access the convertible bonds, right? I
Right.
mean, we don't have Bloomberg terminals. We have no idea what these things are priced at. We have no idea what they're trading at. I'm not a qualified institutional buyer. Um, you can get access to those products via, I guess, BMAX and future convertible bond ETFs, but outside of that, it's a bit
And those are
tricky.
directional, right? Those are directional because there's like they're very contaminated with other convertible bonds.
Hmm.
Like you can't convertible ARB BMAX because it's like 25% MSTR, 25% this, 25% that. So you can't get the delta hedging right.
Yep.
Whereas to your point, if you had a perpetual 0% coupon preferred, the delta should be pretty evident. You could just ARB it from wherever you want.
Yep. Yep.
But then it's like you just said, it's like, oh, we don't really want people, smashing shit. So it's like, yeah, who knows?
Yeah, they're not the. I get the sense that a majority of the convertible bond traders are not. They are not long stock.
That was my
Whereas
too. Yeah.
whereas this instrument strike, you can be. It's people that should be long the stock, right? You're getting
Right.
paid a yield. You're getting paid a yield and being long the stock. The other thing I think might be worth just walking through a little bit is the comparison of IMST and MSTY, or IMST and MSTY to these products, because they're
Yeah.
fundamentally
Yeah.
different products. And I
Definitely.
think that's something that a lot of people may be a little bit confused on. Um, so, and-
Jeff, so you're about to hit retirement. Let's say in theory you're about to hit retirement. You've got this massive portfolio. What are you going to do? Are you going to put 5% in IMST or are you going to put 30% in Strike?
yeah, yeah, I would probably want a blend of all of these instruments, knowing that they operate a little bit differently. I would probably
Mm.
hold, um, if I had just like a fully Bitcoin denominated portfolio, I would probably hold a very large chunk of it in Strike.
Yeah.
So you have that upside and you have that yield. I would probably have a decent chunk, maybe, I don't know, 10 to 20%. Like if I'm at retirement, right? Like this, I'm talking, maybe I got 40 years of life left, 30 years of life left. And I would probably want to hold that, 10 to 20% in Strife, and then probably have some MSTR and MSTY to increase the yield. Just kind of depends on like the income you want, the income you need, and the longevity of the portfolio and your desires and goals with it, right? Like, do you want to pass it down to your kids? If you want to pass it down to your kids, like, is that a different portfolio construction? Do you want more Bitcoin exposure, like cold storage, um, that whole thing? But I'd probably have some blend of the products to minimize potential downside. Because the last thing you want, right, is you go through an extended bear market. Let's just say Strike is trading at, I don't know, $120, and the price of MSTR falls, and then Strike falls. I guess you're still getting paid the yield that you felt comfortable with when you bought it,
Exactly. Yeah.
but I guess you're losing that kind of principal protection. So, or the price, your principal would be decreasing in value, but you should be okay with it if you're just long Bitcoin in general.
And you just set the principal. Yeah. You set the yield percentage to cover your lifestyle expenses, and then it doesn't matter. If that yield can fund your lifestyle, you don't mind drawdowns.
Mm-hmm.
But the way I would do, I think one interesting way, like let's say I wanted to be super conservative and I was really worried about MSTR's volatility and I was like 80 years old or 75 years old. And I'm like, oh, if we have a 2-year bear, I'd be very upset, this, that, and the next thing. But I want Bitcoin exposure. I'm super long Bitcoin, super long Strike. I think a really interesting way to do it is like, okay, in my head, what I want to do is I want to have 30%, 33.3% in Bitcoin, 33.3% in MSTR, and I want to have 33.3% in a high yield cash account. The way you can express that using Strike and Strife and Bitcoin is you can say, okay, I'm going to put the 33% in Bitcoin, get my actual cold storage Bitcoin exposure because I'm a Bitcoin maxi and I really want, like maybe I have to bug out to Europe or something. Now, and then you're like, okay, well, I could just buy 30% MSTR and then put the other 30% in T-bills. But instead of that, you could just put 60% in Strike. And from before, you get about 45% pure MSTR upside exposure. Plus, you get this cash exposure was one way to think about it. That's yielding 15 to 16% right now. And so I think that's kind of a cool portfolio to construct.
This is a swap, right? Strife is a dollar swap, right? You're swapping USD for Bitcoin, right? That's exactly what it is. And because effectively Strategy's balance sheet is it's like a sovereign nation, right? It's over collateralized. You think this company is going to be around forever because Bitcoin's going to be around forever and it's going up forever, Laura, right? And so you've got two options, right? You can hold US treasuries of the US government that's got a negative real yield because the monetary supply is increasing at 6.5% annually and it's paying you 4.3%. So you're like losing money, but it's theoretically safe. Or you have this, right? You've got this other instrument where you can get 10.6% yield, and you're taking that Bitcoin exposure into perpetuity. But that's you're swapping that USD exposure into Bitcoin exposure and getting paid a yield for it. So I'd probably look at all of those instruments. But to your point, Dan, right? 33% cold storage Bitcoin, you could have 66% in Strike and just have no exposure to MSTR spot because you know that you're getting the yield off of the Strike instrument and you're getting the upside appreciation potential of holding the convertible component of it.
Yeah, and I think that's a great way to look at it. You know, for anyone, there's no allegiance to MSTR Class A. There's no allegiance to Strike. Like, the products are complementary. By owning Strike, you're only helping MSTR's leverage, and by owning MSTR, you're only allowing Strike to be convertible into Class A. So I think they're complementary, and you can use them and pick and choose them as you will.
And how I'm trying to think through these instruments for myself is, right, we know that MSTR is incredibly volatile. We think there's a lot of, like, I'm pretty bulled up. I think a lot of people are bulled up about the horizon. We're pretty close to going into price discovery again on Bitcoin, which I think would be pretty close to seeing price discovery again on MSTR. And if we get into this price discovery moment, we could get into this banana zone, right? And at that point, I'd probably be looking to peel back leverage a little bit, and I may use Strife as my kind of peel off and put it into a cash account. Right? If I want to peel off leverage and kind of de-lever my portfolio a little bit, I'll probably be using these yielding instruments to kind of carry me through potential uncertainty over, future chop, future downside, but still be long, Bitcoin and MSTR in a different place, but have this other kind of yielding bucket that I can move and play around with, and it's paying me into perpetuity, right?
Yeah, or yeah, no, totally. Or you go to Robinhood and you margin up hard at 4% margin rates and load it full of Strife.
Well, that's another thing. Yeah, if you got this is not fun. None of this is financial advice. But if you can go peel off a HELOC at 800 basis points, and you've got a yielding product that's going to pay you 10.6 or 10.6%, so let's say that again. If you've got a HELOC that you have to pay 8.5% on, and you have this product, this other instrument that's going to pay you 10.5%, you can now have a 200 basis point ARB just by converting your HELOC into Strife, as long as you time the payments appropriately, right? With very, very little downside risk. And if interest rates fall, the appreciation, you get the principal appreciation. It's just like, that's kind of a no-brainer ARB.
Or Strike, or it's like you get a free call option. You just cover your HELOC with the yield from Strike, and then you get that free 45% exposure to MSTR.
Right, that's another way to do it. You want to walk through that downside protection, the insurance protection idea too, the Strike and out of the money puts.
Were they I think someone was putting it in the chat too. I think it's it's a really cool idea, right? Like the real risk you're taking on when owning Strife or Strike is that somehow strategy loses all their Bitcoin or they don't own Bitcoin in the first place. So obviously, like, we think those risks are very, very low. But let's say you were nervous about that. That's the only way in which like they become insolvent, or you wouldn't get your payout as a liquidation preference if they cease to operate. Then in that case, you could hedge out your risk by buying a very, very far out of the money put for like a year on Class A MicroStrategy. And that way, if they don't own the Bitcoin or they lose the Bitcoin, Class A shares will be worth absolutely nothing. So your put that's very deep out of the money will, you'll get max profit on that put. Exactly. Yep. And you're paying a very small premium to own that insurance. And that's the only way, or I shouldn't say only way, there's only a 0% chance, but that's the main way in which Strife or Strike would not pay out their liquidation preference.
Yeah, so it's you're buying the upside product, but buying insurance to the downside. So you're effectively hedging and locking in your upside exposure, still getting paid a yield for it.
And it's quite cheap. If you look at those 1-year puts deep out of the money for for Class A shares, your effective yield on Strife would fall from about 10.6% to like 9-ish%. So you're not losing that much yield for that insurance because the puts are so cheap. Yeah.
Right. Yep. There was a question. Dana asked a question: the difference between MSTY and Strike. So let's MSTY and IMST. So MSTY, both of those products are covered call income generation products. So they are taking directionally long exposure to MSTR common stock and selling the volatility. You're selling upside in exchange for income, right? They can. If the price of MSTR rises, you're capped in how much the price of MSTR rises because you've effectively sold the stock short in exchange for the premium today. So those products are trading the volatility of MSTR, and there's different risk vectors associated with those different products, right? You've got a risk vector that you get your head blown off to the upside. You see a huge move in the stock. You see a 200% move in the stock, and in a very short time horizon, and effectively you have a huge miss on the upside potential. Whereas Strike, you're not selling the upside potential at all. You're not selling the volatility at all. You actually have that full upside potential. And once the price of MSTR goes above 1,000, the price of Strike it'll start to move more like equity into perpetuity. So you're keeping that like full upside potential, whereas those MSTY and IMST they're chopping off the volatility in return for premium today. So you may be able to hold your principal relatively flat or declining over time, but you're going to get that income in a much higher amount today, and in a shorter time frame. That's why we're seeing those instruments return. I don't know whether they are like 80 or 90%. They call it return of capital annually, but that's because there's significant volatility in the stock, and they're able to monetize that volatility by selling it off. So those products have significantly less upside, but you get significantly more premium or significantly higher yield, but you're not going to get any of that principal, or you're going to get far less principal appreciation than the convertible instrument like Strike.
And you get no principal protection because they don't have a fixed coupon. So in the case of Strife and Strike, the principal should be mean reverting to give you that credit spread that's appropriate in the market. Whereas if Strategy's stock MSTR crashes 90%, your MSTY has about 80% correlation with that. So your MSTY should crash by about 80% down or 70% down. And then the coupon's based on that principal price. So if your principal has fallen by 70% and you were getting 80% annualized yield on that, now your principal is down 70% and you're getting 80% annualized yield on 30% of your initial principal. So you're fully locked into the movements of MSTR.
Right.
Whereas with the Strife, if the Strife principal falls by 70%, which wouldn't happen, but if it fell by 70%, you'd be getting an 80% annualized yield on Strife. So then everyone would rush in and buy Strife. The yield is fixed in both these products.
Yeah. Well, the dollar yield per share, like
Yeah.
the yield percentage will float around a little bit.
Exactly. Yeah.
Right.
Whereas with IMST and MSTY, that there is no fixed dollar yield per share.
Right. Yeah. So the risk vector is back to linked to MSTR volatility.
Exactly. That's a really good way to put it. I think that's the best way to put it. Yeah.
The risk vector is tied to MSTR volatility.
Whereas Strife should not be.
Yeah, it's not. And look at this. I mean, I think this is a good way of showing it, right? So this is just in the last. This is year to date. The red line is the price of MSTR, so you can see how it's kind of moving around, popping around, and the blue line is the price of Strike.
Yeah.
Way less volatile, right? It just here, maybe I'll scroll down so you could actually see it. So the red line is MSTR. That orange dotted line is the conversion percentage. So that's 10 Strike to the number of MSTR, and then the blue line is the price of Strike over time. So you can see the price of Strike is incredibly stable and isn't moving quite as much with the price of MSTR. And what's Josh asking us here? So should the number of shares used in the calculation of BPS include number of Strike shares plus the number of common? I don't know, Josh. We're gonna have to sit on that. Cool. All right. Well, I think I've hit on things I wanted to hit on. You got anything else?
Yeah. To Josh's point, I have to sit with that a little bit longer, but I think what he's saying is there's less Bitcoin per share in Class A shares because the Strike shares.
Oh, the Strike conversion.
Over the Class A payout. So as Strike increases, it actually but it takes priority and reduces Bitcoin per share of MSTR Class A shares, which is the whole idea of its preference in the capital stack.
Yeah.
So that's an interesting way to look at it. Yeah.
That's an interesting thought too. And I've been trying to wrap my head around this as well. Like, why would you ever convert? Right? Why wouldn't you just
why? They probably won't ever convert or something.
Yeah.
He mentioned he's like they're likely won't convert.
Why would you ever convert? Because you have that yield. If you buy it for the yield, you have it forever.
In theory, if it's just how high does the Class A price go up? I mean, if the Class A price goes up to 10,000 a share, then the yield is so minuscule and the extrinsic value of Strike is so small.
But what would you do? Like you just sell it.
Shares. Yeah, you wouldn't sell it because you actually have more valuable Class A shares because you have Class A shares that are higher in the capital stack.
Right.
Oh yeah, no, you would never. I don't think you'd ever sell Strike.
You'd never convert it.
You just would, because if it gets high enough up, you have better Class A shares. Yes, you would never sell it. You would never convert it. That's interesting.
Yeah, that's an interesting thought.
I bet Josh has something to say about that.
At that point, they'd probably issue another class, right? They'd probably issue another pref.
Yeah, exactly. They just have they'll probably issue Strike 2.0 with just a higher strike price and a different coupon.
Right. Strike 2.0, higher strike price, higher. You would have to realize the yield on Strike would be so low that nobody would be buying it, right? It wouldn't be super liquid. Nobody would be buying it.
It would probably trade higher than its MSTR convertible. It would actually probably trade higher than its MSTR convertible price because it's preferential in the capital stack. So it would probably trade at a premium of MSTR. Those shares might be extremely valuable.
And you get the yield.
And BTC per share, as Josh correctly identified, BTC per share yield on Strike synthetic MSTR shares would actually be higher than BTC per share yield on MSTR Class A because it's higher in the preferential capital stack. I mean, that's insane to think about. I think we need to start getting some more Strike Class A or Strike shares.
Yeah, exactly. And somebody said here, yeah, you'd convert, I guess, if you wanted the voting rights, but would you ever want or need the voting rights? I guess that's
You
a
probably wouldn't
question.
care
You probably wouldn't care.
because you're
Everything's
higher up. Because they could vote it all to shit and you'd be fine.
yeah, that's a good point. You probably wouldn't care.
But then
Yeah,
also the liquidation preference. Yeah, the liquidation preference is $100, and if Strike's trading at 1,000 or 1,500, you wouldn't care about the liquidation preference is also negligible. So it becomes closer
right,
and closer to the risk profile of MSTR as it gets farther above the liquidation preference.
right. But somebody said in here they could borrow against Strike, but not MSTR.
Yeah, what's the
That's
margin?
interesting.
What's the margin thing on the margin requirement on Strike? I don't even know. I know
Yeah.
on MSTR I get like 80. I can buy MSTR with 80% value, like 20% on margin on Fidelity, but
Which makes sense because it's super volatile.
exactly, yeah.
Right, but Strike isn't.
Oh, it's not
Yeah.
marginal?
No, it's not volatile, right? Look,
Okay.
you look at this line, right? This blue line, it's just not super volatile, at least to the downside. You've got the downside protection, so maybe you can borrow against it
Does anyone
more.
know?
I haven't
Anyone
looked.
know? We should ask. I'm just asking the comments. Maybe. Does anyone know if you can what the margin requirements for Strike are? Because if you could just like double up, if it's like a 50% margin requirement on, that's nuts actually. If it's a 50% margin requirement on STRK, then you might as well just go full margin STRK, or you could in theory go full margin STRK instead of Class A MSTR, and then you get the dividend,
Oh,
which gives you a 4% credit yield.
oh
Um,
shit. That's an interesting way to look at it. Yeah. Why would you ever do MSTR on margin when you could do Strike on margin and get paid for it?
Exactly. Yeah. Well, because it's like if you bought MSTR with no
There
margin,
you go.
you get 100% exposure. You get 100% exposure to MSTR. But if you bought Strike with 50% margin, you still get 95% exposure to MSTR, and you get a dividend. You get whatever dividend, or sorry, you get whatever yield above the margin payments you make. You cannot margin against MSTR on E-Trade. 30% margin requirement for Strike and Strife Fidelity.
So what does that mean? Walk through that 30% margin requirement. So
I
that
think
means
it means 70% of the value. Like if you were to go and buy a bunch of Strike, all Strike in an account, to buy $10 of Strike, you'd need $7 of value in that account. So $7 of cash to purchase it. And
okay.
30% of the total value of Strike would be 30. Yeah, 3 out of the $10 of total value of Strike would be a margin loan, with which you're paying on Fidelity very high rates for me.
Yeah.
I imagine for a guy like Josh, he's paying like 3% margin.
A little bit higher credit quality.
Yeah, exactly.
Yeah. All right.
This is saying you borrow 70%
You could borrow up to 70%. There it is.
of STRK. If that's the case, that's absolutely insane. Yeah.
All right, we got some things to look into. Everybody's digesting these products in real time, right? And that's why we wanted to get on this call and chat through this, like get this out there, because these products are incredibly valuable. They're definitely, I would say, how do we say this? Overpriced, or like the yield is higher than it should be, right? Compared to everything else in the market, the relative risk, your risk adjusted yield on these products, on fixed income products, is better than anything else in the entire market by far. All right.
Sorry, my mute was on. Yeah, yeah. No, I completely agree. They're just not priced right. Like
They're
this
not
is
priced right.
not priced.
Yeah. All right. We're at 50 minutes. Maybe we peel off. Oh, wow. We had 27,000, almost 28,000 people. That's bigger than a Wednesday night. Okay. This is the right topic. We got to keep talking about this. This is the right topic. Cool. All right.
Awesome.
Well, thanks everybody for the time. Thanks for popping in, and we'll do some more of these. All right. Good deal. Catch you later.
Awesome. Thanks for watching, guys. Talk soon.
See ya.